And
Well, good. So I have a nice bio from you based on.
okay. Do you want me to share my first screen of my presentation so I can just have that sitting there as the background, or do you want to leave it as our
Yeah,
faces?
yeah, we could do that. So
Here, I'm gonna make sure I got it. That's the one. There you go. Nice and easy.
ta-da. Yeah, it's a good place to start for everybody this morning. So actually, a cup of coffee is a good place to start for everybody.
Yeah, for sure.
So everybody's got their coffee dialed in, which is good. So I know Tony's going to put something in the chat to kind of point people in that direction as we're kind of getting everybody in the room this morning, which is good. So yeah, so we'll get things kicked off. Thank you guys for joining so far and being on time. So, but we'll get things kicked off in about a minute or so. What do we got? 9 o'clock. Cool. Yeah, give it about a minute or so. Ryan, I thought you were going to use the enterprise background, so that might be one of the few things
I had to reinstall Zoom stuff, and I lost all my backgrounds.
Well, the one you have, that one's pretty cool.
This one's just like the default, something. Let me see. Let me see if I have any of my fun ones.
I was gonna say, be careful.
I got, we've got a little perusing. There's the I've been on the enterprise many a times for the presentations. That could be I'll just take a look. Yeah, or we go newer enterprise discovery, take a trip in the Falcon if we need to.
Nice.
Okay. And then
I'm pretty sure everybody did not tune in to take a walk through all of those, but that is pretty awesome. So
no, that's exactly what they tuned in for.
All right, guys, we'll get started and really going to get started. First of all, thank you guys for joining us. This is our second in our series of financial wellness, and we're going to have another one next month. I haven't picked the date because I'm just fine-tuning the subject, but we'll have one again next month. Will be more about financial planning within your own, like once you have a house, what are some of the things that you need to do to be better financially set? So we'll get some information out to you guys on that in probably the next week. In the meantime, I'm really honored to have Ryan Shafkus here with us. Ryan's been a great resource. I went and I'll give you a little background on Ryan. First of all, he's a real estate tax attorney, but he's one of the few real estate tax attorneys that actually handles all counties and all property types relative to commercial and residential. A lot of times you get attorneys that will only do one county or one type of property. So Ryan's a great resource because I know when I call him, he can pretty much handle what it is that I'm asking him to do. In the meantime, we'll give you a little background on Ryan. He is a graduate of John Marshall Law School, and in 2014 started working in the tax appeal area. About 5 years ago, started out his own practice, and right now he's growing. He could use some help if you happen to know of somebody who's a paralegal or somebody who's looking for some work in office work. Maybe I'll have Ryan talk about that in a second, but he definitely is hiring, and he could probably use a little help with his social media too. So I teased him about that this morning. So maybe the person that we could recommend might be able to help him out with that. So that being said, I'm going to turn this over to Ryan. Before I do, I want to let you guys know you'll be able to interact with us in the chat. And so in the chat, any questions that you have as they come in, I'll find a good time to interrupt Ryan, and then we'll go ahead and ask that question. In the meantime, this is an amazing presentation. I know at the end of it, you're going to be able to have a lot of fun in backyard barbecues this summer, showing people how to read their tax bills. So with that, Ryan, I turn it over to you.
Thank you very much, Rich. Yeah, all the best conversation topics for the backyard barbecues of your property tax bills. Thank you for that. As Rich said, I'm Ryan Shafkus. I'm an attorney, and I focus my practice on appealing property taxes. I work throughout Illinois. I help clients, big and small, single-family homes, vacant parcels of land, individual condos, all the way up to giant commercial structures, hotels, industrial buildings, etc., and anywhere in between. So that's kind of an outline. And today we're going to talk about property taxes, understanding your tax bill, and kind of the bit of the nuts and bolts of it to understand your tax bill and what to do to save money on your property taxes by appealing them. Uh, Whenever I do a presentation like this, I always like to do the first thing is to get into the basics of property taxes in Illinois. And the first and most important part of that is that we pay taxes in arrears, which means this year you're paying for last year's tax bill. And so that also means since you're paying for last year's tax bill, the time to appeal the bill you actually have was last year. We get assessments announced in the year. So 2021, you'll get your assessment announced, but you won't pay that bill until next year. And so that's the time to fight it is now for something much later. In Cook County, your bill is paid in two awkward installments where the first one is actually calculated based on last year's bill. So in 2021, your first installment that you paid in March was based on 55% of the 2020 bill, which was your 2019 assessment. So it's kind of a very weird process in Cook County. But that's a calculated thing that doesn't have anything to do with your actual tax bill. Then in Cook County, they calculate your full tax bill in the second installment, usually comes out in July, due in August. And they calculate what you owed using the formula we'll talk about in a second, but then they just subtract whatever you paid in the first installment, and then they say that's what you owe, and then that's how they calculate it. Every other county in the state of Illinois gives you a tax bill, divides it in two, and tells you to pay it in two installments. That's how every other county is. It makes a bit more sense that way. Every county, regardless of where you are, has a tax bill that's made up of four parts, and that's the assessed value, the equalization factor, the tax rate, and the exemptions. Now, Cook County this is an example from a Cook County tax bill, but the big thing to note in Cook County is the equalization factor is different than most of the other counties. In Cook County, it hovers around 3, which is a multiplier that'll take your assessed value and triple it. Most other counties, as you'll see in my next examples, their equalization factor is 1, and that goes to just some silliness with how every county is a little different. But I just like to point that out. And this is how a bill is calculated, and that assessed value, that's the number that we fight and that we can fight, that we appeal and we lower. And if you lower the assessed value, it's the top line of this thing. You're multiplying everything else by that assessed value. So if you lower that, your tax bill goes down. Here's an example from DuPage. This is a historical chart of a client that I appealed. If you look at it, the calculation's the same. There's an assessed value, that's the total. There's a building and a land broken out above that. There's a multiplier, which in DuPage County is 1. Then there's a tax rate, and there's an exemption. And this is a client of mine, and if you look at it, their bill in 2019 was $20,421. This is just an example of how appealing can be successful. Their bill in 2020 dropped $5,000. So that was the result of a successful appeal, and that can happen to anyone depending on the circumstances and facts. But in Will County, this is a treasurer report. They actually don't even show the equalization factor, which is again 1, but it shows the same thing: assessed value, tax rate. This is actually a commercial property, so that's the exemptions is the 0. There are no exemptions, but no matter where in the state, your tax bill is calculated the same way. And this is another example of a client on a commercial property who saved just about $10,000 last year by appealing their taxes. The assessed value, again, is the basis of the tax bill, and it is the value that if you lower it, the lower it is, the lower your tax bill is. This is, in theory, tied to the market value of your house. And in Cook County, it's for residential properties, it's 10% of the market value. And every other county, it's 33 1/3, which is 1/3 of the market value. but that is the number that we appeal. And when I say it's tied to the market value, it's tied to it in theory. It's not necessarily a hard and fast rule. And that's actually can be a basis for one of the appeal. One of the basis for an appeal is if you are assessed higher than you recently purchased it, you can use that as an argument to lower the valuation. The assessed value versus market value, when I talk about 10%, 33 and a third, it's just a bunch of numbers, but here's an actual example. In Cook County, if you have a $300,000 house, your assessed value would be about $30,000. And that's, again, the top line of that tax bill. It's just starting out, $30,000. If every other county, your assessed value for a $300,000 house would be $100,000. Again, 33 and a third as opposed to the 10%. So that's just an example of just to see the difference between the counties. But again, all counties start with an assessed value and they multiply it. And now if you look at it, Cook County has a multiplier of about 3, which puts that assessment very close to the other counties. The reason Cook County's multiplier is a little less than 3 is because of the commercial properties in the area, which take on a substantially higher burden of taxes actually than the residential properties. That's only in Cook County though. If anyone does have questions, feel free, or if any of this doesn't make sense, you can chat and then Rich will give me a nudge and help me along. So just, I do like to point that out as yeah, sometimes I know this can be less than straightforward.
So far, so good. But I like this part, Ryan, because it gives you an idea of the difference. You know, how do they come up with the assessed value? And I think the biggest thing, sometimes people are like, well, hey, the assessed value isn't really my market value. And this is obviously a really good slide to segue to. No, your assessed value is definitely not the market value. It is how they're taxing you, but it's not. That's not. They start
Absolutely.
Numbers.
Yeah,
so.
it could be the market value, and I use the market value and the assessed value comparison as the market value should kind of be a ceiling. If you just bought a house for $300,000, you should be assessed at or below that market value. If you're assessed above it, that means you're probably you probably have a strong case for an appeal if there is a market, if you reach the person. I say a strong case because it's not guaranteed. Every year I get perfectly normal transactions that just get denied for one reason or another. And that's actually why it's important to be persistent in your appeals and not just give it a try once on your own or hire an attorney once and you just give up, because it's again, it's something where there's a lot of humans along the way and there's a lot of room for error. So the next thing I want to talk about is that tax rate. This number changes every year. It is based on every taxing body that has a levy on your property, and that's the schools, the parks, the police, the fire, the county, the village, all sorts of stuff. And it depends on where you are, but the breakdown really is, the most thing to note is schools get most of the money. In this example, they're getting 2/3 of the money go right to the school district, but it depends on where you are and how they tax. The city of Chicago taxes things a bit differently and kind of takes it into a general fund. So they have their school and other taxes comprise of like 85% of the city of Chicago bills, but this is just kind of a general breakdown. The county takes a bit, the village, your parks, your libraries, all that stuff. Everyone takes a bit. Most of the money ends up at the school, though, because that's where most of the people are employed. The other thing I like to talk about, and that is very important to look at, are exemptions. If you own a property and you live in that property, you're entitled to homestead exemptions and other exemptions as they apply. It's just really important to note and make sure you have all the exemptions that you're entitled to. When I onboard a client, I always take a look at their property and see what exemptions they're supposed to have. If they're owning a property, it's owner occupied, we always go through and make sure they're getting their homestead exemption. And if they're a senior, we make sure they get their senior exemption. If it's a rental property, we make sure they don't have exemptions. You want to make sure you don't have too many. If you have a couple rental properties and you have exemptions on all of them, you could get fined. they could come back and say you're not supposed to, ask for that money back, and hit you with some extra penalties. And it's just important to know those things. So,
Hey, Ryan. So I know sometimes, what advice would you give to, let's say, a homeowner's coming in and they bought the property and maybe the property was a rental before. So, that it's definitely didn't have his homeowner's exemption as they were buying it. If you're at the closing, let's say, what are you telling that buyer to do to take the proper steps to get that homeowner's exemption?
So I always tell that person to reach out to their local assessor or the county assessor, the township assessor, and look for their forms to fill out. But here's also the thing I let people know. I actually just had a question about this earlier this week. Someone called me up and they're like, I can't figure out, I've gotten my exemptions rejected a couple times. We're trying to get this sorted. What's going on? I've called a couple people and no one was able to answer it. And this is why I start my conversation of this slideshow started with, we pay taxes in arrears. We pay taxes in arrears. So this year you're paying last year's bill. There's also a specific date that's used for exemptions. We need a cutoff. And so what they do with exemptions is there's a cutoff, and the exemptions are based on who lived in the property of January 1st of the tax year. So I had this person call, they couldn't figure out why they were getting denied on their exemptions, but they had bought the property in February of 2021. That was just a couple months ago. And it was an investment property. They had no exemptions. They applied for their exemptions and got rejected and didn't understand why. And I was able to explain to them that, look, the assessor is looking at who lived in that property on January 1st of 2020 right now. And so we're looking, this year's bill is looking back a year and a half at this point. And he didn't live there, obviously. He bought it 4 months ago. And so I informed him that's why he was getting rejected, because he didn't own the property and he wasn't living there. And then the unfortunate part is next year, it's based on who lived there January 1st. He bought in February. Even next year in 2022, he still technically is not eligible for those exemptions. But what happens is he applies for them in 2022 and they will show up on his 2023 tax bill. And that's just the craziness of how long it can take. And that 2023 tax bill, if it's in Cook County, that shows up in July or August of 2023 for a house he bought in February of 21. And then if there's a mortgage on it where you're escrowing taxes, that doesn't get updated with the decrease based on the exemptions until your lender analyzes their escrow, which they typically do on an annual basis. Most often an annual basis around the time you purchased. And so what ends up happening is, for him, I said, there's every chance that you will not notice a reduction on your tax, on your actual monthly payment until February of 2024. And so it was that's just the way exemptions work. Once in a while, you'll get them a little early. The assessor might not pay attention, but most of the time, if you buy an investment property, it can be quite a long time before you actually see your exemptions applied.
So the moral of the story is that January, first January, you get an opportunity to, after you bought it, you got to file.
That's really it. And you can start to file, like the person who was rejected here, most likely they just are rejected for this year. And the assessors probably noted and said, hey, this person going forward, we got these exemptions on it, but still it's not going to apply for quite a while. So sometimes the assessor will just reject it because it's so far out. They're like, we're not going to touch the file yet. But I also like to note that the exemptions are, the homestead exemption is available. The homestead exemption is based on living in a property that you own and pay the taxes on. Okay. If that's the case, you get a small exemption. The senior is if you have a homestead exemption and you're above the age of 65, an additional exemption applies. The senior freeze is if you're above the age of 65, live in the property, have the homestead, and your annual household income is below $65,000, they actually lock in your assessment. What that does is provide consistency. So the assessed value stays the same year after year. The only thing that fluctuates is that tax rate portion. But with the assessed value maintaining a low number, your taxes stay relatively consistent, because if you look historically, tax rates in most areas fluctuate a little bit. And so your taxes will fluctuate a little bit based on that, but your assessed value staying the same for as long as you own the property can be a huge difference. And after 10 or 15 years, I've seen senior freezes have exemptions of $5,000 to $6,000, $7,000 that they're removing from their tax bill.
Hey, Ryan, I have a question that came in. Jay
Sure.
wanted to know how do I determine the tax for a property that has a senior freeze or an exemption? So how do you see it, I guess?
So if you're looking at that type of property to possibly buy, the best way is to honestly go to the county and the treasurer and just see how much it is. In Cook County, you can pull up the property on the assessor's website and you can see how much the senior exemption is. In other counties, you can see it as well. You can just literally pull up people's tax bills. So if
So
you
the
have a,
homeowner, but I think he was talking about like, hey, I'm already in the house. How do I make sure I have those
oh,
exemptions?
if you, so look at your tax bill. If you're in your house and you want to make sure you have your exemptions, look at your tax bill. Um, right now in the collar counties, everyone got their tax bills in the past week or two, and that's important for just a minute here, and I'll explain why. It's in the slides. The ability to correct mistakes. Um, so the next slide is actually, it's important to know what exemptions are currently on your bill. So you can find out by visiting various assessors or treasurers websites. In Cook County, go to the Cook County Assessor site. You can see what exemptions you have. The Cook County Treasurer as well. In Lake County, there's kind of one consolidated site that has everything from assessment to taxes to all the treasurer. It's all on one site there. DuPage County has another site, again, where you can see McHenry, Will County, every county has a site like this where you can basically go and pull copies of the tax bill. I'm just going to back up real quick and just show you this right here, that the red line that is below a 0 is the exemptions. In this one, this is from the Will County Treasurer's website, you could click here and you would see numbers. If this was a single family residence, it would say 6,000. If it was a senior, it would say 11,000. And that would let you see that there's an exemption. To know which exemptions there are, it's honestly best to look at an actual tax bill. Like DuPage County, this one right here actually breaks it out. If you look, this is on their website, you can see senior residential, senior freeze, disabled. This is a single family home with no senior, so they're getting their residential exemption only. And this is a great way. This is what I do with every new client. I pull their property up to look at it to make sure they're getting their bill or getting their exemptions on their bill. Sorry, that was a good question. And it's one of those things that a lot of people, since it's paid in escrow by a mortgage, they just don't pay attention to the actual bill. And it's available online, which is a lot of people don't realize that you can just go right online, find a copy of your tax bill and make sure.
So I do have a question that
Sure.
came in, Ryan. So Priscilla asked, my tax bill shows a spot for a home improvement exemption. How can I apply for it?
That's a great question. Answer is you can't, but I can explain it. Home improvement exemptions are automatically applied throughout Illinois, basically, in the event that you add square footage or a floor or do some structural improvement to the property. And so what that does is, like, let's say you put an addition, you put a family room, or you expand a kitchen or something like that, and you add square footage to your house. When you do that, when you pull the permits, they rather than just saying, oh, you've got added an extra 400 square feet, we're going to increase your assessment. They notice the permit, they apply the changes and increase your assessment, and then they provide an exemption onto your property to it's a 4-year exemption. That's the home improvement exemption. And it basically lets you know, we're giving you a bit of a break for the next couple of years, but your taxes will increase because you improved your house.
Ryan, does the improvement have to include the addition of square footage? Or
So the
yeah,
only time your improvement is going to actually change the value is when you add square footage or a structure, because doing things like a kitchen, or even finishing a basement, most assessors don't directly apply a significant amount to that, because they don't want to, they don't want to discourage people from pulling permits, and B, um, it is, it's one of those where the value of a basement in Cook County, it really just shifts your comparables. Some counties do that, the pulling the permits for the basement will result in a home improvement exemption, but like remodeling a kitchen, it's not going to apply, because they're not going to, your square footage hasn't changed, your bedrooms haven't changed, um, and it's really not going to change your comparables. If you add a bathroom, it might trigger it, but even then it's really rare. The home improvement exemptions are basically meant for things that structurally change the property, because everything else, siding, windows, roof, driveway, stuff you're going to pull permits for, is just maintenance of a house, and they expect you to do that every 10, 40, whatever, 10, 20, 40 years, whatever you need to do. But those are not really things that are going to trigger the home improvement exemption or
hey
increase
Ryan,
your house.
I do want to point out though for folks that are talking about that. So there are some things like when you upgrade, like you upgrade your windows or you upgrade your furnace and everything. Those are good things, but they don't necessarily correlate to big dollar for dollar adds to value. Now Ryan's already discussed the fact that they're really not going to impact your assessment. A kitchen remodel though and a bath remodel, those things are definitely going to help your value as it is determined by an appraiser or in the resale market. Just don't impact your tax bill that much. But just keep
Absolutely.
bathrooms and kitchens, huge return. Statistics, you see like 70 cents on the dollar for the amount of money that you put in. It's probably the highest return that you'll get on any improvements that you're going to make. On the flip side, painting, windows, doors, you're just not going to get that kind of return, even though we know windows are really expensive. So that being said, I'll let you get to the next slide.
Oh, absolutely. And that is just a good point of sometimes the disconnect between how much you're paying for things and the assessment. And that's where it's a good thing to just realize they're sometimes wildly different. Um, but yeah, in Cook County, there was an online portal earlier this morning or earlier this year to apply for your exemptions. And right now it's closed. Every other county, your exemption is going to appear on your bill. And this is important because right now, in every other county, if you look at your bill, they all came out within a week or so. Um, I just had a client it was, I think, McHenry County call me. They weren't getting their homestead exemption. They've lived there for 4 years. Um, I told them to call. Uh, they called their assessor, and their second installment bill is going to get updated. They're going to save $550, and that's why now is a great time, because you can still correct it. Typically, while your first installment comes out, you can call, if you're missing an exemption, you can call your local township, the assessor, um, and you can get that fixed. And they will, most of the time, update your second installment tax bill, because the first ones are due in like 3 weeks. They can't process and update that, but they can, and they will. Most counties are happy to fix this, especially if it's just as simple as they didn't realize, an exemption was missing. Um,
Hey,
they're happy to get that applied to your property right away.
Ryan, in that client's case, so you've went 4 years without a homeowner's exemption. You gave them the great advice to call. They're going to get their second installment tweaked, and it's going to help them. That's awesome. What about the other 3 years? Do they have any claim at that money that they overpaid?
So that was McHenry County. And the answer is no. Um, the only county which lets you look back is Cook County, and Cook County has honestly, the last 2 years, been reluctant to do that as well. There was a new assessor, and I have no idea what policy he instituted, but I was getting denials for the simplest of lookbacks, and I could not understand it. In fact, that was brought up with the assessor this year at the annual meeting about their certificate of error process, and I hope that they're going to tweak it this year, but we'll see. So you can't unfortunately really go back, and that's why I say now is a great time, because now you can at least possibly get it applied to this year, which is the best case scenario, because typically in the other counties, if you've already paid the bill, sometimes in October, if the bill's been paid, they might not even refund it to you. So now is a great time to do that and actually get some money back. Now, transitioning away from exemptions a bit, this is an important thing to note. It's called the assessment cycle. We talked about the assessed value. Where does that value come from? Well, every certain number of years, the assessor takes a look at your property and assigns a value. And when I say takes a look at your property, they're actually taking a look at every single property in the area, and they kind of do so on a mass scale. It's all big numbers, big data. So they're not actually looking at your individual property most of the time. And that's why it's important to appeal. But every 3 years in Cook County, depending on where you are, and every 4 years in the collar counties, or every other county in the state, your property gets reassessed. And what that means is the assessor will assign a new value, regardless of what appeals had happened previously. They look at the data and assign a new number. In Cook County, it's broken into 3 sections. Right now, the city of Chicago is being reassessed. Last year, the south and southwest suburbs were reassessed. And then next year, or 2 years ago, the north and northwest suburbs are being reassessed. So the city of Chicago is in the works right now. Unfortunately, the city of Chicago has yet to actually get reassessed at all yet with this new assessor. So we'll see what happens. And it is May, and this is by far the latest start I have ever seen to an assessment cycle, because the Cook County Assessor has not actually reassessed a single property yet or published any of his reassessments yet. But that's important to note, because the best time to appeal is when that property gets reassessed. You'll get the most bang for your buck, because if you get a reduction in that first year, it will last for the rest of that reassessment cycle, unless it's a 1-year reduction, which is atypical, but would, for example, be the case if you bought a property that was in need of an uninhabitable property that you had to repair to live in. You may be able to get a temporary massive reduction, and then going forward, once it's been rehabbed, then that's a different story. Those are the types of 1-year reductions that doesn't apply to. Otherwise, the best time to appeal is always to look at when you get reassessed, because again, if you get a reduction, then that reduction lasts you the rest of that cycle. And it's important to note that you can still appeal in non-reassessment years. Those examples for what I just showed you in the earlier, both of those slides were non-reassessment year appeals. The clients contacted me in 2020 and we saved them money, but 2019 was their reassessments. So you can absolutely appeal in non-reassessment years, and you can even appeal multiple years in a row. That's certainly the case. I had a high-end client where we just slowly chipped away at his house. It was, $1.2 million. We just kept on knocking it down a little bit and a little bit. And every year they just saved a little bit more. And it just sometimes that happens. This question is pretty obvious, but people ask, why should you appeal your taxes? First off, the bigger reason is Cook County has a lot of properties. There's over 1.8 million parcels. 1.3 million of those are residential, and they are using big data, and that's all they can do, because there's a 200-person staff trying to assess 600,000 parcels each year, every year, nonstop, endless cycle, and to deal with appeals. And so it's just, they're humans. They're doing the best they can, but they have no way to look at individual circumstances. That's just the way it is. They try their best, and they will look at individual circumstances when they can, but they absolutely cannot look at all of them every year. And it's also important to note, the appeal just makes sure you're paying your proportionate share. You don't take money away from anybody. You just lower your assessed value. The tax the taxing bodies like the school districts still just tax everybody. They have their budget. They're going to get their budget. It just determines how much of that, you know, you have to pay.
So I do have a question that
Sure.
came in. The question is, do political connections in Cook County have any influence on tax assessments?
So there was for a long time, the old assessor, I mean, really got run out of office because there was discussion of this. From my perspective, no, I don't know anyone who has, like, I don't know anyone. I have no political connections to anyone. I use facts to appeal everything, and that's all. There maybe at some point might have been some huge properties that the biggest problem I think that happened was there were large properties that in that reassessment cycle, sometimes the assessor didn't get to everything historically, and there was a small percentage of properties where they just didn't get to them. Whatever it happens, they're understaffed. Well, there were some properties that consistently didn't get reassessed for years, and well, maybe there was some issues with which properties fell to the bottom of the stack each year. But that has, with this new assessor, just not really happened. This new assessor doesn't play games at all, and at least from my perspective, the people I'm dealing with, they do not care who you are or who you know. Like, we're talking local assessors, and they have their job to do. There may have been a time years ago when that was very relevant, but in 2021, I would say unless you own a $50 million building, it's probably does not matter who you know.
Perfect. That's perfect. This is the slide I think a lot of people are anxious about. Like, how do I do it? How do I appeal my own taxes? This is great.
So why appeal your taxes, and how you can begin appealing your taxes immediately. Your purchase price can be a strong basis. We talked about that. Look at your purchase price and where it is compared to what that assessment is. If your purchase price is below the assessment, that is a great argument to knock your taxes down. Now, if your purchase price required, if you're getting a renovation loan and you're putting $60,000 into it, that may be a 1-year reduction there. But most transactions that happen, if it's listed publicly somewhere, the unrelated parties, then that's a good basis for your appeal. The other thing you can do is, obviously you can hire someone to appeal your taxes as well. That's what I do. The other argument to be made is you can just make a market value argument. You can look at your property and say, well, look at what everyone's selling for. Right now, it's a tough argument to make. A lot of houses are selling for a lot of money pretty quick. And so you may be assessed at $500,000, but every sale in your neighborhood is suddenly 600 or 550 or whatever it is. And so you may not be able to make a market value approach or appeal. But the other thing that I do when I review clients is I verify the facts, because the assessor, again, is using big data. The data relies on everything being correct. If your information about your property is incorrect, the year it was built or the square footage, then the assessor has no way of ever assigning a proper value to you. And so the next client I had is, this next example is a client who had was selling a property, and the broker noticed that their a square footage was off, and it resulted in them being overassessed to the tune of what you can see here was 30 or basically a 50% higher, but he got like a 30% reduction in that assessed value. It's 89,500 down to 65,000, a huge reduction. And that was because of a square footage error that the assessor had. They were just overtaxing him, unfortunately, for the 20 years he owned the property. And now this is an example of where I was talking about going backwards with those certificate errors. This is in Cook County. And this is just an example, again, showing the assessed value. equalization factor, tax rate, exemptions. They're different in Cook County than the examples I talked about earlier, but those are the numbers, and it shows what their 2019 bill was and what their 2020 bill was, and their estimated savings is almost $7,000. And they were selling their property, and they actually get to reduce their proration at closing based on that appeal, and their buyer gets to have a much lower tax bill going forward. So everyone was very happy in that. But that's another basis for an appeal, as you can just tell the assessor the facts are wrong. I have a 3,000 square foot house, not a 5,000 square foot house, as was this example. They were literally.
That's a great point too. I mean, we're in a white hot market right now, big time sellers market. However, if you have a property in the market, the markets are normal. If you have a property that's overtaxed relative to the other properties that somebody might be looking at, it could be a deciding factor. Hey, I was thinking about this, your client's property or another one, and pretty much they're the same thing, but wow, that tax bill is another $500 a month I'm going to pay. You know what? I'm just going to go to the other property. So even if somebody's selling, appealing a tax bill is probably not a waste of time. It's actually probably to their benefit, because like you just discussed, and I think it's really important, when we sell a property, a lot of people may or may not know this if they've never sold a home that's on here. When we sell a property, you might remember getting a big tax credit when you bought, but now when you sell, you have to give a big credit in taxes to the buyer. And if you could actually get your taxes reduced, that's less money out of your pocket, more net to move on to your next property. So it definitely makes it worthwhile to go ahead and appeal.
That is absolutely true. And that's actually a great example. I literally 2 weeks ago had a client, a realtor, call me trying to figure out why a freshly renovated, nice, great looking house wasn't moving like he expected. Everything else in the neighborhood was moving in, 2, 3, 4 days. It had been on there a week and a half, and they'd had almost no offers. They had some showings, no offers. We take a look at it. His tax bill on that property was 50 to 70% higher than everyone else. And this is not a huge number, but everyone else was $6,000 or so, maybe $7,000. His was 10. And that was because it was no exemptions, because it was a rehab job. So it was empty and had tenants previously. So there were no exemptions. So that bumped it up. And then it had never been appealed, just ever. And the realtor was like, look at this property and this property. Every property he showed me had been appealed, and their taxes were 6,000 or 7,000. I mean, that was, again, we're looking at a 50% increase, going from $6,500 to a $10,000 tax bill, which is only, in reality, what is that, like $300 a month? But still, $300 a month on a house, and when that's your tag, that's a huge number. And so I've signed somebody up literally last week to appeal a house that's on the market because it's not moving. And the nice thing with that is I don't charge up front. So in that way, if it sells before I can appeal, no harm, no foul. They've sold the house, they move on. Maybe I try to talk to the buyer about appealing it going forward. But if it's under appeal actively, they can just transfer it, let the buyers know, hey, it's actively under appeal. Or if we have a decision and we haven't gotten the bill yet, we can say, look, we've reduced the tax or the assessment by 20%. You can expect to see some significant savings on the tax bill when it does come out. Those are all great things for sellers.
And Ryan, not knowing where you're going on the next slide, how does a homeowner appeal? Is it something, do they have to go find their taxing township and walk in? Can they do it?
Well, that's a great question. Let's click next. So when to appeal your taxes is the first part of that equation. Your township assessors, depending on where you are, at Cook County, there's a formal appeal period, a 30-day window. I'm sorry if you can't see these, but these are just every township has a different deadline. That's why there's so many of these, because this is Cook County Townships, DuPage County Townships, and Will County Townships. Everyone has a different deadline on when you're able to appeal. There's a 30-day window based on the county you're in and the township within that county. And so that's the first step. You can really only appeal within that window. And you can
And
appeal.
for the record, I want to note we strategically did this now because appeals do not open up until June.
Yeah, most all appeals, like I said, the city of Chicago hasn't started anything, but most appeals run from June or July through November, December. That's when a majority of everyone appeals, and there's a 30-day window. It's determined by your township when they publish their assessments. And so some places in DuPage County and Lake County, sometimes they publish early and they open up in June for an appeal. I monitor every township, every county for deadlines all the time. If you want to monitor on your own to appeal, just find out where it is. If it's Will County, you can look up the Will County website. They publish that. If it's Lake County, there's a site. Same with DuPage and Cook. This one here on the left is a Cook County display. The middle there is the DuPage County. The right is Will. McHenry, Lake. Every single one of them has a site like this. And if you just search for my county board of review or appeal deadline, you should be able to find that. But that's the first step. If you want to appeal on your own, find out when. Then you have to put together your case, and your case is the most important part. But again, the market is one possibility. You can use your purchase price, you can use an appraisal, and or you can just use market comps from neighbors in the area. But the big thing to note with that, if you're doing this on your own, is to look at the numbers, because again, assessment and market value are related. And if you're appealing based on the market, you have to make sure that your market value per square foot is higher than the comparables per square foot that you're providing. Just because it's a 3-bedroom and a 3-bedroom, if you're a 2,000 square foot house and this other house that's similar, 3-bedroom, 1.5 bath, but it's only 1,800 square feet, it sold for a little bit less than where you're assessed. Well, per square foot, it might have sold for more and might not be a good comparable. And it's very important to watch that, because that's the number the board of review is really going to look at. When it all comes down to it, you can provide comps, this, that. They want to know if the properties are legitimately comparable. They want to see the per square foot purchase price versus where you're currently assessed per square foot.
Yeah, that's perfect. So I mean, if you're in a 5,000, or let's say you're in a 2,200 square foot home, you're not going to bring 1,000 square foot comps. So
you can, you don't need to bring, if you're in a 22, you don't have to buy, it has to be 2,250 square foot or 2,200, you can bring a 2,600 square foot comp. That's okay. It's a little on the high end, but that's fine. You want to bring comps that are as close as possible, square footage wise and land size wise. You don't want to have, you don't want to be comparing a 2,000 square foot house on a 1/4 acre plot to a 2,000 square foot house on a 5 acre plot of land, because they're very different considerations there. You can compare a 1/4 acre to a 1/3 of an acre or a 1/2 acre. There's some difference there, but it's not the end of the world. You just want to make sure you pay attention, because a lot of times in neighborhoods, corner lots or the back of a cul-de-sac will have more land, and that's fine. Still relatively comparable, like within a neighborhood.
One thing I wanted to interject in here is that, where would be your best resource to find those comps? I would call the real estate agent that sold you your house and basically ask them, hey, can you give me a couple closed comparables? I just want to see what the values are, and if I have an opportunity to appeal. That would be a great place to go. Ryan, do you have another place to go? And then I'm going to get a question in that came in.
Sure. The other place to go is, me typically. But you can also just check the data on, honestly, if you just look at your neighborhood and look for what's closed in the past 6 months on Redfin or Zillow, like that's not a bad way to just look and get general data. I always say, if you're going to do this on your own, take everything you see outside of the assessor with a pretty big grain of salt. So if Zillow says it's sold for $350,000, that's probably right. They don't usually mess around with selling prices, but the square footages are reported, and they're not necessarily what the assessor looks at, because a lot of time in real estate, People will put finished basements in the square footage because they're allowed to and they want to make their house bigger. The assessor only cares about what the assessor's facts state. And the assessor always looks at above ground square footage. So when I talk about price per square foot, I'm talking about the square foot number that the assessor has, and you can find that on your assessor's website. That's an important thing to note. Like, you can go to the Bloomingdale Township Assessor in DuPage County, and you can find out what he says. You're like, I think my house is 2,100 square feet, but the Bloomingdale Township Assessor says it's 2,002 square feet. That's the number you go with, and that's the number you use for your calculations, because unless you're fighting them on that and saying that their fact is wrong, use the assessor's information for everything when comparing stuff, because they're not gonna use any other information but that when they look at this.
Yeah, and that's a great point. You can not only protest your value, but you could also protest the square footage if you know the square footage is incorrect. So that's a good point. I want to get back to that, but I want to get a question in.
Sure.
Question came in. What is the average first year savings from an approved appeal on a single family home in Cook County?
Cook County, God, average is tough. I would say on average for successful appeals, so like, it's, I don't know, I would say a couple $100 is you're never in Lake County.
$200 a year, $200.
Couple $100 a year savings. I'd say between 500 and 1,000 is a pretty good.
That's more than
estimate.
a couple hundred. So I mean, you're talking about
For,
80.
yeah.
For
Lake County this year, I actually just crunched the numbers on my single family homes. I saved in Lake County an average of, I think it was $1,200 this year. But keep in mind, that's an average. There are plenty of people who saved zero. There's plenty of people who saved, $500, $200, $400, and then there's a lot of clients who saved $3,000, $4,000, $5,000 on the larger appeals. And I said, because this year the highest high-end properties were the $40,000 tax bills. There was a lot of room for nudging them downwards, because those properties were not currently commanding the values, the prices that they were assessed at.
I mean, the bottom line is, I mean, even $600 a year is $50 a month. That's
absolutely not. And all of this, there's almost no risk to this. And I say almost because I'm going to put that out there. So I review all my clients, and I will never submit an appeal when I know certain assessors in certain townships and certain counties will push back. And that's important to note. There are places where they will, if you try to make a case, and let's say you just purchased it, but you're trying to argue some other way, like you just purchased it for $500,000, but it's only assessed at $450,000. But you're trying to argue, oh, your square footage is off. You say it's 3,000. It's actually only 2,500. They're going to say, okay, we'll correct the square footage, but then we're going to increase the assessment up to what you just paid for it and increase your tax bill. That's very rare, but and I've never seen that in Cook County. I have seen that most notably in Kane County. DuPage County will, most of the time, they'll just push back if you try to submit an appeal, and there is a, let's just say, recent purchase above the current assessment. They will gently remind you most of the time, maybe you want to withdraw this appeal. But if you as an individual go to your local township assessor, most of the time that's the best place to talk about if you have questions or complaints. They can help you. They might even help you pull comps depending on where you are. And we've been talking a lot about the market, because there's been a lot of craziness in the market. I always like to point out there, you can also appeal based on the equity, which is to say finding houses that are similar to yours in your neighborhood. And again, neighborhood according to the assessor. But the equity is to say, I have a property that is 2,000 square feet, and it's assessed at an assessed value of, let's say, 20 per square foot. Whereas I have 3 neighbors or 4 neighbors in my neighborhood, I looked at their property under the assessor's website, and they are assessed at 15 per square foot. And you look and you're like, well, these are pretty similar houses. They were built around the same time. They have two and a half baths. I have 2.5 baths. They have a basement. I have a basement. Why are they assessed at 75% of what I'm assessed? They're at 15 a square foot. I'm at 20. You can put that case together, present it to the assessor or the board of review, and that is also a legitimate avenue for appeal. Because in Illinois, taxes have to be made according to the market and fair. And so fair is kind of equity, and we say it's not fair to have 4 or 5 similar houses to yours that are being taxed less than yours. And again, that is a case you can put together. And I just note, find the data using the assessor, because the assessor cares about what the assessor has. Even if it's incorrect, you really can't argue someone else's facts are incorrect. Let me tell you what this actual square footage is. Even if you know your neighbor may have improved their house, you don't really want to be doing that. It's also just not going to be productive. So
I want to get, we're closing in
that's
on
true.
10 o'clock here. So I want to make sure that we get any other finer points that you've got.
Okay, let's
Questions
go through
you
a
guys
couple
have.
things.
Yeah,
Any
any of the
questions?
Yeah, let us know about the questions, and then I want to make sure we cover all the points. And I think
I've got a
when we
couple
talk,
slides left.
all right, perfect.
Yeah, I have just a couple left. And so I want to real quick touch on, I had mentioned earlier that persistence pays off. So you can appeal at the assessor, you can appeal at the board of review, but there's also the state. If you get an unsatisfactory decision, you can appeal that decision from the board to the state of Illinois. Those decisions can take a long time to process, anywhere from 1.5 to 4 years. But if you get a successful decision there, they actually refund you money and just send you a check because you had to pay your taxes. If I appeal the 2021 assessment, it's still pending at the state. It'll be pending at the state for years. The tax is already paid. So they'll actually issue you a refund. And here's an example of where persistent paid off for a client. They reached out to me in two years ago in May. I signed them up to appeal. It was in McHenry County. I filed an appeal for them at the board of review of McHenry County. They said, nope, no change. Client paid their taxes. And that was issued in 2020 last year. I took that decision and appealed it to the state of Illinois, where it sat for a year and change. Then last year, I appealed again at the board of review, and this time got them a reduction that saved them $1,059.62. That was issued in March, and this literally a week ago, they just got a tax bill that was lowered by, and I calculated that yesterday, exactly that much, so $1,059. Now, since that decision, the McHenry County Board reached out to settle that 2019 PTAB, that appeal that was pending, and they agreed to settle that. And now, in the next couple months, my client will get an $1,100 or $1,075 check written to them by the county. So that's why it's important to never give up and kind of keep this process going as long as you can.
Hey, Ryan, we have a question that came in. So, and you were talking about going to the tax review board, but I want to talk, I think this question just is talking about the initial appeal. So how long does it usually take to get an appeal decision?
So typical time. So once there's a 30-day appeal window, you submit in there. Decisions usually come out, I say 6 to 12 weeks, depending on where you are. Cook County, it's going to be about a 2.5 month turn time for decisions. In the collar counties, it's different. So every county issues their decisions in bulk. Will County and Lake County issued in January this year. McHenry issued in February, and DuPage issued in March. But in DuPage, if you appealed in DuPage County, Bloomingdale Township, you had to appeal that last year in July, and your decision came out in March of 2021. So sometimes it's a very long time, and sometimes it's down to 2.5 months.
And I would imagine when you make that appeal, you can ask that township, what
Yes.
their turn time
what
is.
when their decisions are expected. Most townships will tell you, right, or the county will tell you where it is, and I can tell you it's consistent. Lake County issues their decisions in bulk in January or February the following year. DuPage has for the past 3 years issued decisions in March. That's just what it is. Again, their appeal times vary, but they're pretty consistent on when they issue their decisions. So that's actually the end of the slideshow. So these are just some helpful sites of, websites. The first one, you can look up a lot about property. That DuPage Co site lets you look up your property, and that lets you pull reports like that 5-year report I showed you that showed the person's taxes over the years and kind of did a breakdown. These are just helpful sites to look things up about your. That last one is Lake County, their deadlines. That's the site where they put all their deadlines for their appeal
Hey,
year.
Ryan, I want to say so a couple things just to kind of close out. Number one, I know I have one of my clients. By the way, this is Ryan's contact information, so it was also in the chat, but it's here too. But one of my clients, I know you were talking about, hey, you could go to the township. They may even help you pull comps, and I know he was able to do that in Schaumburg Township. Just walk right in. They pulled comps for him and made it really easy process for him to appeal it individually. So certainly if somebody wanted to do that, they can. On the flip side, if you say, hey, I'm too busy, or maybe this is just a little bit beyond what I can comprehend and handle, then you engage somebody like Ryan. Ryan, if you want to talk about a second how you work with the clients and how that process works.
Absolutely. And so, yeah, you can go on your own and do that. If you ever do it on your own, I always say, look, persistence pays off. Don't just appeal at the assessor. Don't just appeal at the assessor or the board. If you're going to do it on your own, still make sure to use the state. There's a lot more forms you have to file there, but it still can be worthwhile. You can get a lot of money back. And the way I work, I sign up clients. I don't charge up front. My fee is based on the estimated first year tax savings. It depends on where you are in the assessment cycle, where my bill is, but my rates basically vary between 25 and 35% of the first year's savings, or how much you get refunded from the state of Illinois. Like if there's a refund PTAB decision, I take a chunk of the check and you get the rest. And the appeals, like I said, it's between 25 and 35% of the first year's estimated savings. I don't charge if I lose. I don't charge if I can't find a case for appeal, if there's just nothing to do. I don't charge for the initial consult or to sign up. There's no upfront fee, and there's no extra costs or charges either. Mine's just a flat percentage, and that's it. And I'm happy to answer questions, comments. You can call or text or email. I'm happy to just, if you have general questions, that's fine. I'm happy to educate on property taxes.
Yeah, and the bottom line is, we rival, I think, New Jersey for the most taxed state in the nation as far as property taxes are concerned. So, I mean, this is a big deal. So, I mean, it's definitely something that, we're trying to bring value to. It's definitely a good idea to keep an eye on this bill, know what's in it, know what it says, know how you're being assessed, because, the $1,000 tax savings that we're talking about, what is that, $80 a month on your payment roughly? That's $80 a month that can go towards paying down your principal. That's $80 a month that you can invest. I mean, there's just a lot of things that money could be redirected to. So, we're with the way, kind of, we talked about it like, hey, we're going to help you get into debt by getting a mortgage, but now I got to help you get out of debt. And if that means taking that extra $80 and putting it towards principal, let's get you out of debt. So, but that's what we do here. So Ryan, thank you very much for being here. I don't see any other questions in the chat. We'll definitely have another program for everybody in the next 7 days. And we look forward to seeing you guys there. And one last shout out and thank you. None of this is possible unless Tony helps me get this done. She did a great job, as always, with creating our Zoom, making sure that we were on time with the little test and everything, getting all the information out to you guys. So Tony, thank you for that. And Ryan, thank you very much for your time. Everybody else, enjoy the rest of your weekend.
Thank you very much for having me.
Take care, guys.